Hi, this is Amos Schwartzfarb, and you are listening to the SaasHoles.
Welcome to SaasHoles, a show dedicated to issues within the software as a service industry. We are revenue ops with a edge. Jamie, KG, and myself, Pete, have a combined 100 years of making interesting decisions. Please subscribe to our weekly newsletter. Today, our guest is Amos Schwartzfarb. Amos Schwartzfarb has been growing businesses for 25 years and investing in startups for the past 10 years. Managing Director of Techstars in Austin. Since 1997, he's helped build companies that have been sold to Yahoo, RH Donnelly, the Home Depot, plus over 60 more as a Managing Director of Techstars Austin. He's also the best-selling author of Sell More Faster and Levers. Before we get to Amos, this episode is brought to you by NeuroNoodle. Hey, parents of athletes, get a doodle of your noodle, a brain map before the season starts, so you have a baseline to compare it to. You get a physical every year, right? But get a brain checkup before the season starts. Schedule an appointment now at neuronoodle.com. Carney.
Yeah, Pete.
Carney.
Mm-hmm.
What time did the man go to the dentist? 2:30. Leave us some comments on our blog at saasholes.net. Shout outs. Not even fake laughter. I miss you, Ferrara.
Did I run
Jamie, I'm just
do it?
That one is just so bad.
Jamie, I'm just so glad that you're back because he tortured me with those while you were not able to. Anyway, thank God you're back.
It's so
Jamie.
bad. I apologize for you taking the brunt of that torture.
Hey, TikTok
He
loves them.
used to have a whole team. KG, you weren't part of it. He used to have a whole team dedicated to bad jokes that they would write him bad jokes for his Monday morning speeches.
At Career Builder? No, you don't say.
Yeah.
Hey, speaking of Career Builder,
And they were funny.
Well, you already heard them. There's only so many bad dad jokes out there. Believe me. Speaking of Career Builder, Steve Cerny, Chief Revenue Officer at Career Builder.
Congrats.
How do you like them apples?
Mm-hmm.
People don't know this. He's a break dancer.
I did not know that. I should text him right now. Is that true?
He is a break dancer, and I believe he's got a twin brother, and they put on a show. You might see him one day at the train station. You never know.
I'm texting him right now, calling him out on that.
KG, you got any shout-outs?
Just a couple. Congratulations to my friend Cameron Huber for starting a new position as a social media marketing manager at this Assist. They're here in Los Angeles. And I've my friend Ebony Artis, she's over at Apploy. She just started a new position as marketing coordinator. And so I'm happy for her there. That's an amazing startup ATS focused on the healthcare space. And then another one at Apploy, Grayson Galbraith, somebody I'm coaching. She got promoted from SDR to account executive. Pete, we were talking about that. Like, how do you make that transition? So she's made that transition, Grayson, from SDR to account executive as of October 1st, and she's already closed a couple of deals. So that's
God bless America.
That's a big deal.
Rick Carner, attorney at Bernanke Law Firm. Way to go, Carner. He started off the street, worked his way up, paid for his MBA and JD. Now he's going in, and he is a jaw jabber in court. Love it. Kyle Singles, promoted to Director of Talent at Cameo. Way to go, Kyle. I think he went from Career Builder to LinkedIn. I don't think he did the ZipRecruiter, KG. He went straight to Cameo.
Nope.
Carney, you got any shout outs or,
I do. I didn't put it down on the sheet, but
okay.
Judy Dever, I want to give her congratulations. Judy Diblick Dever. She just became in-house counsel at JLL, Jones Lang LaSalle. Jason Bartush, guy who used to work for me, is now director of embedded analytics and partnerships this year. So I got to give him a shout out. I was going to give Cerny a shout out, but you already took and stole my thunder.
Well, if you would have looked in the notes, it's right there.
I know. I would have. And that's all I got.
Okay. Now, KG, Amos was your boss. Who is this guy?
Well, back in the day when the first business.com was in existence, we had this crazy idea that we would set up this search engine that was based on pay-per-click advertising. I think it was 2004, 2005, something like that.
Yeah.
Amos used to be at Hot Jobs. And so our CEO set up a new company, work.com, and Amos was the general manager of this pay-per-click job search engine. Unfortunately, it was way ahead of its time, and HR people were like, I don't understand pay-per-click. It just, sell it to me per post. So we shut it down, and Amos then came over to be the VP of sales at business.com, and I was immediately reporting to him. And I'll tell you what, this is the first sales leader that ever taught me what a real sales strategy was all about, and taught me about that it's okay to love your employees in a, not a weird way, but like, love is a good thing. And and I'm just grateful that I got exposure to Amos and learned from him. He's wise beyond his years, and he's also an adventure racer, by the way. I don't know if you guys knew that. It's actually a little known fact that Dora the Explorer was loosely based on his life. But no, that was not true. That was not true. That was a lie. That was a lie.
How about the making of the movie, right? I just saw that one.
Yeah, no, but the adventure racing is true, and all the other stuff that I said about Amos. He's an amazing individual, incredibly generous, and I'm thankful that I got to learn from this guy. How about that, Pete?
Wow. Well, shoot.
Well, I feel like there's
First
some
of all,
tissues.
well, welcome Amos to the
I'm,
show.
I'm blushing. I have no idea how to even respond to that. I think when Kevin told me that similar story a few years after we were working together, he basically said something like, I was like, who the F is this frickin' guy? What the hell is he doing, my boss? What the heck does he know? And, I probably felt the same way because I've always suffered quite a bit from imposter syndrome, but good to know that, fortunately I had someone like Kevin to work with alongside with another woman, Tanya Weisner, and I think the three of us made a really good team. We worked well together solving problems.
Yeah, that's right. And then ultimately you helped us get acquired for $350 million and made my stock options worth something. Thank you for that.
Oh, shoot, man. You're talking about pay-per-click. If you're an OG, old school, I mean, that's how you made money, is selling 468 by 60s, because all the classified ads were free. I mean,
well, Kevin said something funny, which was he said that work.com was ahead of its time. I agree with that statement, except that Indeed started literally the same month that we did. And Ronnie Kahn, who's the founder of Indeed, is a friend of mine now. I didn't know him back then. He lives here in Austin, and he was actually an investor in my last fund. But we started at the same time. So we could say we were ahead of its time, but he had the more persistence on the model than I did at that time.
Well, they pursued it differently, Amos. They went with the organic approach to get users, and you were selling already. You were trying to monetize already.
Yeah, there's a huge lesson in that, which I've heard before, and now I preach, which is, don't worry about making money on day one. Worry about delivering value to your customers, because when you do that well, you will make money.
Yeah, and in that instance, the customer wasn't the employer; the customer was the candidates.
That's right.
And that's where Indeed focused on that, and Work.com was focused on selling ads.
What was fascinating?
I want to debate that with you. Your customer is who gives you money.
Yeah, Indeed's customers were job boards to start, and then the market dried up, and they went to the staffing firms, and then went back to the job boards when the job boards started having money after 2008, and then they kept on going up. Or down the chain, however you want to look at it, big agencies, bigger companies, and they slowly and surely just crippled the job board industry.
Yeah, I agree with that. It was a
great strategy.
I do want to push back. Their customer was never the job seeker. The job seeker was always their product. It's just that they recognized that they had to build a great product. Hence, how do you create something awesome with the job seeker so that the employers would want to spend money on it. No.
Fair enough. Fair enough. The dynamics of a two-sided marketplace.
Yeah.
It's tough to build.
Well, what do they say? If the product's free, you're the product.
Yeah.
So where are you at now, Amos? Give us a run through your career again.
Yeah. So after we sold business.com, I was still living in LA, and I, for like the third time, swore off ever being part of a startup again. It lasted about 4 months. I moved to Austin and started another company in the music space, which was great, fully bootstrapped, and we sold it. And then I joined a company called Black Locust here in Austin. And that was a really fast but really good run. I was there less than a year. We sold the company for $55 million after our Series A with basically $1 million in revenue. And then I started another company after that, which crashed and burned. And somewhere in there, took over the role of running Techstars in Austin, which was a little over 6 years ago. So for the last 6 years, I've been predominantly an investor in early stage companies.
What is Techstars?
Techstars is a global accelerator with our mission being helping entrepreneurs succeed wherever they are in their journey, which could mean a lot of things, but it doesn't matter if you're in the Bay Area or LA or India or Germany, wherever you are, we want to be able to help you be successful. Also, idea to ideation, how do we have an impact on helping you, the entrepreneur, build an awesome, meaningful, long-term sustaining business.
And you're an author too?
I'm an accidental author twice. Yes. The first book, Sell More Faster, which Kevin wrote the forward to, KG wrote the forward to, is really in a lot of ways a depiction of the time that we spent at business.com. And I say accidental because I'm no longer an adventure racer, but at one time I was, but I still am a pretty avid cyclist. And I screwed up my ankle pretty bad, and I was off the bike for about 4 months, and I can't sit still. And so I had that energy to do something with, and long story short, I decided to see if I could write a series of blog posts, and they ended up being many, many pages, and Wiley got a hold of them and decided to publish them as a book. Obviously, there's a little more to it than that. And then the second book, Levers, I put a lot more thought into it because this is actually the framework and structure that I use to work with the companies that I invest in. But I didn't write that whole thing myself. I plucked friends of mine who were experts in different parts of the framework to help write those chapters. So while I oversaw the whole thing with my co-author, Trevor Baim, Cody Sims, who was at Techstars and now part of my climate journey, and Troy Hennekoff, who's at GP at Math Ventures, were our co-authors on that.
KG?
Yeah. So in that first book, and you talked about our time at business.com, and this is part of what I was saying earlier. You taught me what a sales strategy is all about. I'd say it's time to lay it on the listeners. What's W3?
W3 was something that we came up with there at business.com when we were trying to answer really a very simple question about our existing customer base, what was working and what was not. And it started off of really I think just as us literally asking these questions of ourselves and realizing that in that there was a strategy. But it's 3 simple questions that are very hard to answer when you actually put the time into figuring out. It's, who do I believe my customer is? And I'll go into a little more detail on all 3 of them. What am I selling? What is my customer buying from me? Not what am I selling to them? And why are they buying it? And so for the who, if you ask any random entrepreneur, hey, who's your customer? They will likely give you a very broad answer for a lot of reasons. 1, they may not know. 2, because they want to paint a picture of a massive market. But the way that we think about it, the way we thought about it at business.com, the way that we think about it, and the way that I teach it now is, what is the narrowest and most specific definition of who you believe your customer is or who they are, so that you can develop a long list of attributes, so that you can say okay, I know if someone has all of these attributes, 100% of the time they'll say yes. Doesn't mean that I'm only going after this group of people, but it helps me deeply understand who they are so that I can start to play with the attributes, take some out, add some in, and eventually reach the entire total addressable market. The what are they buying from you, not what are you selling? It's a slight nuance. And what I like to say is no one cares about what you do. They care about what you do for them. So what are they buying from you? The example I like to use is Google, or we can say business.com, right? No one wakes up in the morning and says, God damn it, I can't wait to buy search today. They say, gosh darn it, I want to go buy customers. I want to go find customers. And getting search on Google, they are essentially looking for how they will acquire new customers or acquire research or leads or whatever it might be. And then the why do they buy? How is it impacting the business and the individual? And those are separate things. So for the business, is it driving profit? Is it driving margin? Is it creating some efficiencies in time? That's for the business. And then separately, and we learned this the hard way at business.com, how does it impact the individual buyer? So for example, you could be trying to sell to someone who you know you're going to drive their revenue by 20%, but that individual buyer, they may not get a promotion or a raise or a bonus just because they're buying from you. And so what's their incentive to do more work when it doesn't actually mean anything to them, which circles back to the who. It may not be the right who at that time.
Yeah, the example at business.com was, and by the way, Amos, Jamie is the finance and ops guy, so there's a lot to be said there. And the who in particular at business.com, it was prior to Amos coming on board, we basically were just selling to anybody who bought pay-per-click. And by the way, whenever it starts with anybody who, is way too broad already, okay? And we were selling to anybody who bought pay-per-click advertising on Overture at the time, which, you know.
Overture, oh my God.
Yeah.
We dated ourselves by a lot.
That's right.
I remember Overture.
But the problem ended up being is that we would sell advertisers into categories that didn't have any traffic. And so Amos, with the who part of the strategy, we got really, really clear that we were looking to sell customers, and it got deeper than this, but it was, you know, customers that were buying pay-per-click advertising in categories on our site that had high traffic and low advertiser coverage. And it became very narrow in who we were going after. And I've used that every other company that I've been at, because when that market that you're going after is so huge, you're gonna see very low conversion rates because you just aren't focused. Jamie, what are your thoughts on the ops side here?
Well, I mean, I think there's one part I like the who concept. I was thinking, what about can, right? Because there's a lot of times reps are talking to somebody who wants to buy, who says they can buy, and they have, especially nowadays with COVID, they cannot buy. Like we were dealing with that with a client that was trying to hit us up to sell us some stuff. In fact, they were on our show, People AI. They're hitting up different people in our organization. The person that could buy is sitting right here. I was like, I'm just going to put it in the budget. It's bought. Don't worry about it. But they spend a lot of time on all these other people that just give them lip service, and at the end of the day, they can. Who can buy it? Who can put it in the budget? Who can make things happen? Who can authorize all this stuff to get it done?
Well, I think that's right, and I mean, you can separate it out. I think about it as the can as a subset of the who. I learned the same thing again at Black Locust, where, and I'll use like Home Depot and Lowe's as the two examples. I learned that if a company didn't have someone whose title was pricing analytics specialist or something pricing analytics, that they were not going to be a customer in the near term. So using Lowe's and Home Depot as an example, Home Depot had a single person responsible for all pricing across their millions of products. Lowe's, every single one of their merchandisers made pricing decisions. So there were hundreds of people. So you tell me which one is going to buy faster and have more influence. Yeah.
It's difficult. I think nowadays with COVID, the biggest change has been the people that can buy has shrunk because, some of these bigger companies are trying to control everything and make sure they're not overspending. And it depends on also how big you are. You need to the larger the company, you need to also be thinking about when do I engage procurement and all of that type of stuff, because procurement ultimately is going to be involved in a lot of large companies. medium-sized companies, you got to make sure you're high enough up and don't have happy ears. You know, I see that with a lot of sales people where they had a great conversation with somebody who had a certain title and they're telling everyone and their mother that this deal is going to come in. And at the end of the day, we find out that that person cannot buy and has no chance of helping us besides, you know, influencing the decision.
No, Jamie, I swear to God, I've used this so many times. Interest is the counterfeit of need. My friend Ken Krogh from InsideSales.com used to say that all the time. Interest is the counterfeit of need. Oh, they're really, really interested. And then they put it in their pipeline. And like, no, come on, man. Go figure out if it's a real deal or not. Oh my God, that's awesome. Amos.
Yeah, I completely agree with that. And I think W3 address the way that I think about W3 addressing that is with the why and the how do you know, right? The why is because it's going to impact my job by this. Well, how do you know? Because I measure by this. So if that person is able to articulate, well, I know it will drive blah, 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 the likelihood that they're able to sell it themselves internally up the chain, whether or not they're the decision maker or not, will increase if they can say like, hey, I know it's going to impact the business by 5%. Well, you know, are you as the finance guy, are you going to say, no, I don't want 5% more revenue?
No, we're going to say, take.
Yeah.
Go. Yeah. It is interesting though. And it's interesting how deals, I think in the last year or so have changed from, you know, maybe multiple different people within an organization that have buying power over a certain amount to it really being down to a small amount. Every deal I feel like has delayed if it's over a certain dollar amount compared to where it was maybe 2 years ago before. That could have something to do with scale. People working from home, not traveling as much, not wasting time. They're in logistical nightmares, have more time or expected to have more time to sort of sign off on everything.
Easier said than done. This W3, you know, process, you know, you're dealing with founders that like most of the time it's first time. They've never done this, you know, before.
Yeah.
Otherwise they probably wouldn't be with, you know, Techstars if they don't need that assistance, you know. And so, you know, you're laying the W3 on them, the who and the what and the why. How do founders go about proving their W3 and making sure that they've got the W3 right?
Yeah. I'll answer that, but I want to say that the interesting thing is the majority of the founders that I'm working with in the last couple of years are not first-time founders. They're serial founders. They've done it 3 or 4 or more times. And the reason is because they know how freaking hard it is to start a company and they're looking for as much support as possible. The incremental 2 or 3, 4 or 5 points that they're trading off for that, meaningless relative to being successful.
Don't argue with me on
I
show.
will always,
Don't argue with me.
I will argue with you and hug you at the same time. Your question, there's a bunch of workshops that I teach all the time, and W3 is one of them. And I lead off with this comment almost always, which is, if you think this is going to be easy, it's okay if you want to leave, because it's not. The mental image you should have in your head is, right now, you have to go in your backyard and you have to dig a 100-foot by 100-foot wide ditch that's 100 feet deep through limestone with your fingertips. That's what you're about to go do. So be prepared for that, first of all. And that is including figuring out your W3. It is hard work. And now maybe I'm just old, I have not figured out a substitute for picking up the phone and talking to dozens, if not hundreds or thousands of people and figuring it out. I do not believe this is something, except in the rare case where someone might just getting lucky finding a needle in a haystack, that it doesn't take more than 3, 4, 5 years to be able to prove that you can find repeatability in your W3. You may have lots of markers along the way that say, yeah, I'm pretty sure I'm headed in the right direction. But getting that proof, I think it takes a long, long time and a lot of hard work and a lot of conversations and a bunch of customers that aren't the right customers and customers are going to churn, and the discipline to go and look and say, okay, what works in my list of attributes and what doesn't work, and continuing to refine it over time.
Amos, you're a Yellow Page guy in a past life?
I can maybe, not really, but sort of.
No, well, I definitely was, and it wasn't even
You basically
Donnelly.
said, I do not want to bring that up.
Yeah. Well, I'll tell you, my first sales job was at Hot Tails, my first real sales job. And
Yeah.
the thing that I went through a stretch of like, how do I figure it all out? And I got really, really lucky. I had a customer who I don't even remember who they were anymore, but they were also salespeople. And they gave me this 12-page list that had like 200 lines per page of all of the people they were calling on. And I did exactly what you're describing. I went down and like, crossed off and starred, and it wasn't in a computer. It was on a piece of paper.
Well, Donnelly had a script. I don't remember how many pages it was, and you couldn't hit the phones or actually it was the street, at least it was for us, till you memorized that script. And it was such a great education because you learned the difference between creative advertising, directional advertising, and this is all before Google. You had Yellow Pages, and then we had a taste of classified advertising, working with the newspapers and Career Builder, Hot Jobs, and whatnot. And it is interesting how all these companies kind of morphed in not a good way. Do you think there's one thing that you could point to that the reason why they didn't continue to be successful or didn't, especially with the Yellow Pages, they had it all. They had the lists and they could have dominated. Why didn't they?
Yeah, I know. I don't know if I could point to a single thing. And if I were, probably the word would be arrogance, that things weren't going to change. And I look at Donnelly, when they bought business.com, the reason that they bought us was because they recognized, and it was already too late, but they recognized that their model wasn't going to persist. And so they needed to figure out how to get online. So I don't know. There's probably lots of reasons, but I think arrogance is the biggest one. It's why, totally separate conversation. It's why I think the music industry is going to tumble, and people inside don't see it, but it's going to happen.
I think that happens across the board. As soon as the company gets too big, they get arrogant. They also try to get outside of what they're known for. Everyone tries to do it, and we experience that. Why not be the best at what you are and focus on being the best at what you are? And just own that until, so many of them try to expand outside because of multiples or anything like that. And then they end up dying 5, 10
Well,
years later.
this was interesting, Pete and Jamie, because, Amos and I, worked through this whole thing ourselves. And, RH Donnelly had bought an online advertising company previous, and that was a failed acquisition. And they then went and bought us then for $350 million. And the strength that they had, you do your SWOT analysis, they had a sales force of 900, they had like, 1,000 salespeople or 2,000.
I think it was like 3,000 or 4,000.
Yeah, something huge like that. And then they had something like 900,000 customers, or a huge customer base that was still buying print, on the back of the Yellow Pages. And they knew that those were turning into doorstops and they needed to change, some things. And, Amos, you may recall that sales force was unionized. So getting that RH Donnelly sales team to like change, it's like you have to have a rep sitting next to you. And that was number one. And then number two, they had become a big company. And what came with big company? The bureaucracy and the negotiation on the product and the direction and stuff like that. And everything just, when you left before I left, and I probably should have left when you left, because just watching this, the dilution of a company was really, really sad, because everything was this bureaucracy and negotiation. And, Jamie, I don't think the answer was for them to double down on Yellow Pages. The answer was to pivot to online advertising and use the strengths that they had, but they couldn't get out of their way because of that arrogance that you talked about. Yeah, because of that arrogance that you talked about, Jamie.
I think for anybody who's a rep out there starting out, I almost feel like this, and you guys can correct me if I'm wrong, but when the company starts saying that their competitive advantage is you, the sales rep, to me, I love the sales reps. I always want, but at the end of the day, the sales reps are going to go where the product is the competitive advantage because it makes their life easier. When you're the competitive advantage, go get your resume and go get a new job, because there's someone else out there that has a better product, and you're selling. It's making it harder for you to sell.
If you're selling a crappy product, you well, the crappier your product is, the more you get paid, right? Because you're a differentiator, but that's not scalable, right? What about quarterly reports? You think that comes into play? managing investors' expectations every 90 days, and then you throw out the long-term growth.
90 days, Pete. You've been out of the force. It's every 30 days.
Well, I'm just back then.
You mean public market reports or just in general?
Yeah, in general.
Look, I'm not a big company person, and I won't even say I've never been on those earnings calls. But if I had to step back and say, managing the short-term expectations would probably go a lot better in balancing that versus long-term expectations if they were able to say definitively, and I'm going to plug my latest book here, things like, I know who my customer is, I understand my business model, I know how we're prioritizing things for the short and long term, here's how we're measuring it, right? And here's what we're going to do, and here are the things we don't know. They would probably be able to better say, we're not going to hit these numbers because we're going to hit these numbers down the future. And here's why we know, and here's why you should have confidence in us. But I don't think a lot of that happens. I think to your point, it's the fear that my stock price might go down.
That and the unions is my 2 cents, because you can't get rid of anybody. That affects culture, and because I want to say, oh my God, going back in the day, you guys remember DoubleClick? It was like if you who the hell bought them? I don't even remember. Google. Oh shoot. You would outsource to them. You would be the site expert, and you would have to go out and you would have to get mind share to get the sales force to pitch your product and get share on there. And that's sort of what the newspaper was like when because Career Builder had, 3-4 owners, Jamie? And you had to go out there and you had to, back in the day, it was a 4-legged sales call. You had the classified person, and then you had the online person. It became a fist fight on who was going to get what. And, the online guy was winning. Just because it was cheaper, you get more out of it. I just can't believe we couldn't take better advantage of it. Jamie Carney, your thoughts?
We couldn't take more advantage of it because the owners wanted to inflate their price. So no matter what we did, they were trying to protect. We unfortunately at Career Builder were owned by 3 sinking ships. And those sinking ships wanted to protect their financials because they were public and we were not. So therefore, they would protect their environment as much as possible. And that's why it was like that. And all 3 of them would just take as much money out of our bank account as possible because they were bleeding across the board. I think that's a very unique situation with what we were dealing with compared to a lot of other companies. Because usually sinking ships don't buy the anchor that's sinking them.
You've talked about why companies need a sales strategy. It sounds so freaking obvious. Like, of course you need a sales strategy, but like you literally have gone off and like wrote about like why companies should have a sales strategy. It's obvious, but why do you find the need to actually have to say that and explain that?
Yeah, I believe that companies need a sales strategy for a number of reasons. I think the primary ones that I see are, one, it's very hard to find repeatability in your sales process if you don't have a strategy, because you won't understand it. And if you don't have repeatability, it's quite literally impossible to scale effectively and be able to stay sustainable. The other reason to have a strategy, and they tie together, is because it gives people a common language around and the ability to be aligned around the things that people are working on, so that everyone can be rowing in the same direction, which leads to repeatability. And I think one of the challenges that I've actually I think there's a couple of things. One, sometimes people don't fully understand the difference between strategy and tactics. 2, and I think this is a bigger thing that I've come in contact with recently, which is, there can be a couple of different kinds of strategies, and you may have one nailed and not the other one. And the one that people seem to rely on is the execution strategy. So, okay, we're going to regionalize our reps. They're going to sell into a region. That's our strategy. Or they're going to sell into an industry. That's our strategy. That's not a strategy. That's the execution of a broader strategy, which is understanding your W3 who, what, and why deeply, so that then you can organize your teams in a way that aligns everybody to that strategy. And then everyone knows their marching orders. Everyone's rowing in the same direction. Everyone's talking about the same things. You're measuring your success on the same barometer, and it gets everyone going in the same direction. I talk about all of this in Sell More Faster and in Levers.
What do you see when, I mean, this is fascinating because I love working with founders as well. And one of the cool things is that like you and I can meet these founders and the things that we talk about, it's like, oh my God, I hadn't thought about that. It's like we get to repeat this, playbook because we've learned the hard way. And so they time and time again, they actually just don't figure out how to level up in that strategy. And why do you think that is? Like, why do you think that and a lot of these teams are product-led founders. They're product-led founders. That's a huge, category these days, product-led growth. So they have a product strategy. Why don't they think about a sales strategy? Why don't they do that?
Yeah, well, I would argue, this is separate from answering your question, but I would argue that those that have a product-led strategy, the majority of them don't really understand what that means. And they probably don't have a customer facing strategy, which is okay, awesome that they know what they want to build and why they want to build it. But what's the proof that the thing that they're building is the right thing? So I think answering your question more specifically, I'm guessing at this, I would be willing to bet that the number one reason is a combination of imposter syndrome and ego. And those two things marrying together, which is fucking ask for help. Building a company, sorry that I cursed, I'll say it again. Go ahead and, all right, I won't say it again. Fucking ask for help. Like, building a company is hard. It's really, really hard. There is not one single successful billionaire founder that has done it by themselves. They have figured out how to surround themselves with the people that are experts, that are better than them at the things that they do, with mentorship, which is what Techstars is really good at, with advisors, with team members, with executive team members that are able to do the things that they can't do or don't know how to do, and rely on them, right? You build a team and ask for help. So I think that's the biggest thing, right? Is like, oh, as the leader, I'm supposed to know how to do this. And so I'm scared for people to find out that I have no idea what I'm doing. Or being so bold to think that because I believe something is true, it is true, right? Like if you believe it, great, go prove it. Jake was awesome at this, right? Not at being bad at this, at being really good at this. Jake would always say things like, great, I hear you, your intuition might be right. Why do you believe it to be true? One of the biggest things that Jake Weinbaum was the CEO of business.com. One of the biggest things that I learned from him, and I admire the shit out of this guy, was that he would ask the question why over and over and over again to get to deeper and deeper levels, and force us to really question and prove why our intuition was what it was. And sometimes our intuition was right, and a lot of times it wasn't, but we would always get to a great and a better answer. But I think the biggest reason is people are afraid to be found out that they don't know.
It's the biggest obstacle of getting outside help. And, if you're the smartest guy in the room, get the fuck out of the room. Right?
Yeah, totally. I never want to be that guy. I never am that guy.
Oh, that's hilarious.
If you can't figure who the player is, you're the one that's getting played.
Amos, we talked about that last week on our podcast. This, the CEO job, the founder job, is one of the loneliest jobs out there because they feel like, gosh, I'm leading the ship here. I should have all the answers, and they don't, and so they get stuck in that, and that's where VCs these days need to provide additional value to help founders, through that. And obviously Techstars has an amazing acceleration program to do that kind of stuff. So no doubt.
I have a really close friend who's also an executive coach. He's not my executive coach, but he's a great executive coach named David Mendel. And he talks about the job of a CEO. And he said the CEO has only 3 jobs. Everything else is somebody else's. Job number 1, set the vision of the company. Where are we going? Job number 2, create a culture, whatever that is. Create a culture, right? It is inherently the CEO's job to do that. And job number 3, keep the company capitalized. Everything else is somebody else's job. Now, in day number one, when you're a solo founder, you are everybody else. But over time, your job is to fill in the gaps with people that do that all better than you. Your job, your expertise should be those three things. I agree with that.
Oh, that's huge. Of those three, Amos, when does the founder need to be replaced? Which one of those three are they not doing well?
It's usually all three. I don't know that it's a great question, and I don't know that I've seen one, but what I usually see is they sort of, that house of cards crumbles together, right? They can't set the vision, so they have trouble raising money, and the culture is going to shit, or they can't. It's some combination of the three. And I also believe in trying to keep the CEO or the founder intact as a CEO for as long as possible. Not always possible, but I am a believer in trying to keep coaching that person to get there over time.
Now, I don't know, but the capitalized part, because they got to, talk to the board and whatnot, but to keep the people putting the money in, keeping them happy or giving them data back, I would think that would be a huge, once you get to a small company to a big company, if you can't objectively give the data that shows why you're doing what you're doing, founder, because I know it's going to fucking work. That's why we're going to do it. All right, search firm time.
Yeah, not exactly. Not good enough, right? And in the early days, by the way, keep the company capitalized might be go out and sell. Don't depend on somebody else, right? Like figure out what are the initial metrics. And I talk about that in Sell More Faster, which is if the founding team, and not just the CEO, but certainly the CEO, is not the first salesperson, you're probably fucking up. Because if you can't do it, you can't expect anyone else to do it.
No, amen. It's funny you talked about that. It's set vision of company, create culture, keep company capitalized. But yet you're also saying you also better be the first salesperson.
Well, it's the same thing. You're keeping the company capitalized through sales.
That's right. What I have found, and we talked about this on previous episodes as well, there's a difference between delegating and abdicating. Simon Severino, that was our guest, and we talked about that. And he goes, yeah, you can't just go, I don't know sales, so I'm going to then hire a head of sales to then lead sales for me, because then you're going to get duped. Because you're not delegating that sales process to then have an expert specialize in it. You're basically saying, I don't understand it, I don't know it, and you're closing your eyes. And I've seen founders get screwed by that because they just go, well, I don't understand it, so somebody else is going to figure it out for me, and you're going to get lied to. It's just the God's honest truth, right?
There is a very small group of people who I think are capable of being a first salesperson in a company if they're not the founder. Kevin, I think you're in that group of people. I like to think that I could be in that group of people back when I was an operator, but it is a very, and not special, like, there's something special about us, but it takes a combination of being more like a product marketer versus a salesperson, and being able to identify why things are connecting in a certain way, and for emotionally, your motivation to not be about the cash register. I mean, of course that's important. I'm a capitalist. I want to make money, but the primary motivation being the solving of that puzzle.
What can we plug for you, Amos? Let's make you some money out there, because we got at least 7 or 8 listeners that could go your way.
Awesome. So recently in April, I co-authored a book called Levers, the framework for building repeatability into your business. 2 of my co-authors, Cody Sims and Trevor Baim, they've created a side business using this framework. I'm an investor in that company, of course, where they teach this to companies. There's no equity exchange. It's a 1 month long hands-on class that they teach. They work with founders in small groups to teach them how to build repeatability into their business. Would love to be able to share that. It works for startups. They typically, their W3 is they target founding teams that have at least 9 months of cash in the bank and revenue, not a revenue stream, because that would mean they already have repeatability, but they have revenue, so they have some semblance of who their customer is, and there needs to be at least 2 executives, not a sole founder.
Amos, what is W3?
W3 is the framework that we use to come up with the sales strategy, which is who am I selling to? Who do you believe your customer is? What are they buying from me? Not am I selling to them? And why are they buying my product?
Amos, thanks for coming on the show today. What's the best way for our listeners to learn more about you or connect with you?
The best way to reach out to me is over LinkedIn. I do my very best to respond to everybody. I'm just Amos Schwartzfarb at LinkedIn. I'm not super fast all the time, but I will always respond as long as you send me a message and don't just connect with me.
What about the people that just want to connect with you and just sell you right away? How do you feel about that?
If you are good at describing what I am buying from me and not what you are selling to me, I will likely engage with you.
Duly noted. Thanks for listening to the SaasHoles. On behalf of Jamie, KG, and myself, Pete, we thank you for listening and ask for you to give us 5 stars on Apple Podcasts. Subscribe to our newsletter and the podcast notes below, and you can always buy us a beer on Patreon. We thank you for listening. Cue the music.